It's about that time of day again. My name is Joseph. It's Tuesday evening, February 21st, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bearish, but two major support levels in the chart tell us that we're running out of space to keep selling low, and our best option is to wait for a trap tomorrow. The E-mini S&P is bullish, and a new sideways range on the chart is telling us exactly where to find the best buying opportunities tomorrow and where to beware. Got a great chart tonight for the E-mini traders out there. How about some gold? The yellow metal is bullish, but one significant clue on this chart tells us to stay patient for a pullback because there are likely more buyers waiting below. The euro is bearish after getting clobbered today, but we have a big clue telling us this market's most likely exhausted and wait for a pop higher so we can sell it right back down again tomorrow. The FDAX is bullish, and there's a big psychological resistance level waiting overhead telling us where this market wants to go and where the best and worst buying opportunities are likely going to be tomorrow. Boy, oh boy, we're back after a holiday weekend. Hope you guys had a great long weekend. Can't resist, though. Back for another big week of learning and earning opportunities this week on the newsletter. I got another great video in store for you guys tonight. Got a bunch of great setups clearing our way here for tomorrow. Before we jump into that chart, though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come here to the blog at Sideways Markets and watch the full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. I'm always posting charts and links throughout the day. Got plenty of different ways to follow me on social. Pick one and follow me here this evening. Download those charts right below the video tonight. It's a great spot there. You can download all the charts you see me using in tonight's video. Download those charts by following that link below the video on our blog. And please don't forget to grab your free pass. If you're not a member here at School of Trade, don't do anything here besides grab that. Well, watch the video too, but make sure you grab that free pass in the upper right-hand corner. You're going to learn more with me in 90 minutes on the webinar than you will anywhere else on the interwebs. I can guarantee that. If you're not a member here at School of Trade, grab your free pass in the upper right-hand corner. If you're brand new here, don't forget we got a great frequently asked questions page that'll cover the who, what, where, when, and why. And don't forget, I'm always here to help you guys out. Hit me up on the live support tool on the right-hand side of the website. Boy, oh boy, oh boy. Well, it finally stopped raining for a day and a half here in Los Angeles. Finally got a chance to get outdoors a little bit here this week. I hope you guys had a great weekend out there. I know it was pounding snow and pounding rain a lot of places here in the U.S. I hope wherever you were, it was warm and dry wherever you were. We're back here for another big week this week here. We got kind of a last full week of the month of February. We got a holiday week, obviously, so Monday was the holiday. We're through Tuesday. What that tells you is that we're going to push back tomorrow's inventory report. So tomorrow, of course, it's Wednesday the 22nd. As we look at the news tomorrow, right, going right on the list here, looking at the news tomorrow, we have a bunch of news coming out. Of course, we got news from Germany, the Italians, right? Great Britain, of course, 4 o'clock and 4:30 a.m. If you're trading tomorrow morning in London, right, you'll want to be aware of those, right? Watch out for that GDP coming from Great Britain, right? That will definitely be a market-moving event. If you're with me tomorrow morning in the trade room, we open up, of course, at 8 o'clock Eastern time. We skip on down to retail sales at 8:30, existing home sales at 10 a.m., and of course, if you're sticking around for the afternoon session tomorrow, right, the FOMC meeting minutes at 2 o'clock. All of these are relatively, kind of standard run-of-the-mill major news events, nothing too dramatic. So be aware of that tomorrow early morning, 4 o'clock and 4:30, 8:30 and 10 o'clock. And again, if you're sticking around for the afternoon session, right, the FOMC meeting minutes. I'm sure those meeting minutes are going to be a good read tomorrow afternoon just because, of course, right, that first FOMC announcement, right, of the new presidency of the new year, right? So you'll be reading what they were talking about behind the scenes, right, on that. So that should be an interesting read there. Get some good reading for you guys tomorrow at 2 p.m. Eastern time. Again, the one thing you'll notice is not here tomorrow is the weekly inventory report. We're not going to get the API number tonight, right? We'll get the inventory report on Thursday. right? Where is it here? Scroll down a little bit further there, Joe. There we go. Right. So 11 a.m. on Thursday. I actually really like it this way, to be honest with you. I wish it was like this every week. Normally we have the weekly inventory report, which remember is pretty much the only big news that moves crude oil all week, right? That's one of the big reasons we like trading crude is because it's not susceptible to all the other jitters that come around all the other news events, right? So crude's a nice, easy market because it's not reacting to all the news. It just has that one news event, that inventory report, which is usually on Wednesday mornings at 10:30 a.m. Because Monday was a holiday, and of course, right, we know that holiday pushes things back 24 hours, so it gets pushed back to Thursday at 11 a.m. The bottom line is, if you were tuning in tonight for the API levels and the prep for tomorrow's inventory report, right, well, it's been pushed back 24 hours, so we'll do that tomorrow. Let's come back and see me again tomorrow night. I know. Tolerate my bad trading jokes tomorrow night, right? And get your hands on all the API information tomorrow night. So we'll talk more about inventories tomorrow night. And as we look at it, it's a relatively wide open week. There's no real major news. We're not dealing with Yellen anymore. We've got through the FOMC, so we're good to go here through the rest of this week. And I hope to see you guys tomorrow morning. We'll be in our trade room at 8 o'clock Eastern time. I look forward to executing the strategy right along with you guys. We got some great charts here tonight. We got crude, S&P, gold, euro, and of course we can't forget about the FDAX. FDAX is perky here tonight. Let's take a look here at crude. The black gold, the Texas T is bearish and trying to finish off a measured move this evening as it rotates down to the low of a bear channel. The sellers clearly have control, but we're running out of space to allow us to keep selling high. We don't want to sell low. We don't want to sell into the measured move. We don't want to sell into the low of that channel. So our best option, right, is to either sit on hands right now or wait for, right, price to rise higher, find some areas of resistance so we can sell it back down. We're watching for traps. We're watching for failures up above those resistance levels, waiting overhead as this market tries to take the move that happened over the holiday. One of the things that happens quite a bit is whenever we have a holiday session, the markets are technically open on Monday, right, electronically. So, of course, the move on Monday, right, goes higher, right? We, of course, continued that move into Tuesday's session, right? This low, right, that low from Monday is definitely going to be an objective here for those bears. So you definitely want to keep it in mind tomorrow as this thing continues lower here, right? As long as those bulls can't rip control back, right, we're trying to go back to, right, where the day began on Monday. That's usually what happens when you have a holiday weekend or, a day off during the week, right? Whatever happens during that day off, almost always, not always, right, but usually finds a way to come back and kind of restart the season, right, the week again, right? So kind of think of it as they're trying to go back and do a redo, a mulligan, right, on what happened yesterday and, of course, into today's session. So that prior day low at 78 is definitely going to be on our radar here. With that said, now you kind of know what to expect on those holiday sessions. It's not just crude, right? That happens in a lot of markets. And so, of course, we're looking to kind of take back, right, that move that happened over the long weekend. With that said, this is a really important chart here. The most important thing right now is going to be this channel. Now, I want you to remember channel rotation, because channel rotation is going to be a big important part about how we trade this tomorrow. And when I say rotation, what I mean is you'll notice how the market goes from the high down to the low. Once we get to the low, and this is really important, right? Listen to what I'm saying right now. Once we get down to the low of a channel, now imagine, right, tag, they got their objective. Now there's a magnet now that turns on and price wants to go back to the high of a channel. Once we get to the low of a channel, we then look for rotation back up to the high of the channel so we can sell it back down again. I know this sounds very basic, but this will come into play in just a few moments. Once we get up to the high of the channel, right, tag, we got you, right, got your objective. Now where's the objective now? To get back down to the low of the channel, right? So the low right now is the objective. Now what happens when we get back down to that low? Tag, got it. Now what? Magnet turns on. Price will want to go back up, right, to the high of that channel so we can what? Tag, got your objective, and now go back down to that low. So where I'm going with this is, right? Imagine there's this magnet, right, that draws price back and forth from supply to demand, from support to resistance, from overbought to oversold, whatever words you want to use to describe it, that's what's happening. So with that said, where are we right now? We are just a few inches away from that, right, from that low. Just a few points away from the measured move, right, and the low of that channel. Imagine for a moment, right, that there is a channel here, and imagine you break that channel up into thirds, right? Let's make this easier, right? Imagine there's your channel, and you break that channel up now, and this may not be drawn to scale, I apologize, right? But, break it up into thirds. So I want to sell, right, in the upper third, okay? This, of course, will be, kind of a maybe. It's definitely not going to be the most reliable, right? And I want to be a buyer down here, right? I want to get out of my position down towards those lows. So the reality is that we are down in that kind of lower third of that channel. The only trading I want to be doing down here is buying to get out of positions I'm already in, right? I'm not going to buy the market like get into a long position. I'm going to buy as far as buying my way out of a short position, right? Covering my short position, liquidating my short position. So now think about this now. If we're going closer to that, right? If we're down in that lower third here now, right? We're running out of space. We're running out of space here to sell high. We're not selling high. Okay, so just keep it in mind, right? Kind of break those channels up into one third, one third, one third. I want to be a seller up in that top third, right? That's where the money's made. At an area of resistance, there's a lot of room for a target below us, right? In the middle, so-so, right? So-so. It's definitely not as reliable, right? But you can still make a reliable trade though in the middle of that range. Once we get down to that last third though, you're picking up scraps, right? You're fighting over whatever's left over, and it's not a great place, right, to be looking for a sell. So with that said, where would we like to be trading right now? I'd like to be trading up near the highs. Now, this is where what I was talking about earlier comes back in. There are two scenarios that you want to keep in mind right now. Here's scenario one. Scenario one, we do not finish rotation. Okay, we don't finish rotation. Scenario one, we go up. Without finishing rotation, we can now sell back down, right? We can now sell back down. So finding an area of resistance, 43, 52, 65, right? Just get it up in those areas of resistance so we can sell it back down. Now, scenario two, we do finish rotation. Careful, what do we do now? Are we just selling at resistance now? Not so fast, right? Now, of course, the magnet turns off the low, right? And now what happens next, right? The magnet turns on now. We should be trying to go back up to the high. So this is where it becomes really important that you understand that term rotation. That's why I said right at the beginning, listen to what I'm saying, right? If it gets down to that low, right? Got it? They got their objective. Now what happens? The magnet turns back on and price will try to rotate back to the high. Once they get the high, boom, got it? Now we can go right back down again. Now, here's one more thing here to keep in mind, right? And that is, let's just say the bottom completely falls out of this and the market just really runs. Now, when the market really runs through the low of this channel, that would be a scenario where you're being told the bears are looking for more, right? For whatever reason, channel rotation is no longer the objective anymore, and now they're hunting for something else. Now, again, this requires strength, right? This move through the low of that channel. I'm not talking about this. I'm not talking about little poke its head out. I'm talking about go, right? Real strong run. If it real strong push through that low, that's screaming at you right now. The channel is not as relevant as it was before. We don't know why. We don't care why. All we know is when we see proof like that, now we know, right, we're probably not going to get the rotation all the way back up, right? Because, again, the sellers are screaming at us right now, right, that this market is bearish, and so we're looking for any opportunity here now, right, to get this price back down. So find an area of resistance if it runs right through it, right? If we just run right through it. Again, if we see it rotate and we see profit taking, okay, chops around a little bit, that's fine. Wait for that price to go up and we'll sell it back down again. But if it finishes the rotation and slams through, that's going to tell us now, okay, these bears mean business. We're probably not going to see the full rotation back up to the high unless the market completely rebounds and becomes a bull market. And at that point, obviously, right, we'd be looking to be a buyer instead of being a seller.